Alrighty, I'll start off with the statement of acknowledgement. We would like to acknowledge this land that we meet on today is the traditional lands of the Kaurna people, and that we respect their spiritual relationship with their country. We also acknowledge the Kaurna people as the custodians of the Greater Adelaide region, and that their cultural and heritage beliefs are still as important to the living Kaurna people today. Apologise that we're kicking off 10 minutes late, but we just had our in-camera session with the external auditors, so that was a very useful session. Attendance record, I think we are all here today, which is good. There's no apologies, there's no motions to grant leave of absence, no leave of absence and no non-attendance. Okay, so we'll go straight to item 3, which is the declarations of interest. Does anyone have any interest to declare? None noted. Okay, and then item 4 is the confirmation of the minutes of our last Audit and Risk Committee meeting, which does feel like it's a little while ago, which is the 1st of July. Has everyone had a chance to review those and happy with the minutes? Yep, okay. That's good. Then I have a mover. Ben will move it. Seconder. Christine second. All in favour? Carried unanimously. And then item 5, is there any business arising from the minutes? No? Okay. Very good. All right, we'll move on to item 6, which is the decision reports. So 6.1 is the draft general purpose financial statements for FY25. Erin, did you want to talk to those?
Okay, through the chair, sorry. We are reporting this year an $885,000 surplus. It's probably more important to have a look at the underlying result, which we have $2.357 million deficit. You need to make sure, because 885 is fantastic. However, we need to take into account the distortion for the FAGS grants, so the FA grants, and also the LRCIP, which I'm sure John's enlightened you on. So we were treating those as capital grants during the year. It's come to light with in the audit process that they're actually going to be of an operating nature, so we've had to transfer them across as well. And it also takes into account, which we haven't actually done in years gone by, the Roads to Recovery grants as well. So we received that funding from the state government, I think, and we use them for capital projects during the year. So that takes into account as well, which we've never done before. So it's really important to have a look at the underlying result as well, because that's essentially what we're basing our rates on. So when we're doing our rate declaration, so we're taking out all of those distortion. There's a couple other factors that we put on top of that as well. So any of that new initiative sort of income, like Roads to Recovery, LRCIP, and any advance payments, those are not taken into account when we're rating our ratepayers. So that's really important. So the ratios that we achieved this year, we've got an operating surplus of 2.05%, so that is within policy. However, the underlying surplus, which obviously takes into those distortions again, is minus 1.56, so that is just below policy position as well. The net financial liabilities ratio is 63.68%, so that means that when you get further into the agenda today, we have achieved our aspirational target. I think it was 75% as well, so that's pretty fantastic. We've got an underlying net financial liabilities ratio of 62.35. The asset sustainability ratio, so we are above our target of 100, so target position for council is 0 to 100%. We achieved 138.54, so it is above target, but we have been talking quite a bit about making sure that we're doing our renewal of assets, so that is definitely achieving where we want to be. So all of the detail for the variances is further in the agenda in 7.1, so the financial performance summary. I think we had 4 actions in our audit completion report, so 3 of those had been completed at the time we did the audit. We still have one outstanding, which is the way that we're treating detailed designs and concept designs when we come to capital projects. So at the time of the audit, we were a bit under-resourced in engineering department, so it's definitely something that they're looking at now, and we're trying to make sure that we're complying with the accounting standards, but also how we're defining concept and detailed design. So we'll work with John and the auditors this year to either expense them or rename them, so sort of refinance them. So happy to take any questions.
Thank you. Before we go to questions, I'd like to introduce John from Dean Newberry's, the external auditor. John, did you want to talk through the financial statements or your completion report or relating to this matter?
Thank you for thanks for the opportunity to address the committee tonight. I'm happy to take the report as read, because also the management have provided responses against each of the audit matters and take questions if there are any in addition to that. But other than that, can confirm that we're in a position that once all the the final administrative aspects of the audit are completed, which are outlined in the report, we're in a position where we'll be able to sign the audit report once we get the signed financials through to us as well.
Thank you. I'll open up to questions. Are there any questions? Christine?
Nothing of substance, just a question on page 41 of our pack, and it's page 31 of the actual accounts. Just in the liabilities, interest-bearing borrowing section, and terms and conditions, and it just quotes the fixed interest rates, 5.09% and 6.85% as the range, and those interest rates are exactly the same as the prior year. So I was just wondering, is that because we've got exactly the same loans, or is one year different from the other?
Sorry.
Page 31 of the actual accounts and page 41 of our package. In the liabilities, interest-bearing borrowings section, under terms and conditions. And it quotes some interest rates, and they're exactly the same both years. It could be because the loans are exactly the same both years.
Correct. So that's talking about our fixed rate loans. So we haven't got any different fixed rate loans this financial year, and the variable interest is the only one that has changed. Yeah.
Okay, yep. Thanks.
Just going to page it's 58 of our package. Let me just find it. Nearly there. It's the certification of auditor independence. It's just got the prior auditor's name in there, and it refers to 2023, so just need to fix that.
Noted. Thanks, Christine.
Good pick up. John?
That's actually the one that this council signs, that one. So I believe the names are still correct. It's just a year. That's the one that this committee signs. If that's the one, on page 48.
Mentions Galpins
Was it?
and June 23.
Oh, sorry.
Yeah.
I thought you were talking about the names at the bottom. Sorry, you're correct.
Pick up. That's it. All right, any other questions? Ben, do you have any? No? No?
I can just talk about this being a really good result, I think, for management. It looks very tidy, and it's a lot of work that goes into it, so I'd just like to acknowledge that.
Yeah. And well done, yeah. Erin and Renee, for all your hard work in pulling this all together, because it is, you know, it's one single audit report, but there's a lot of information that goes into the financial statements. So well done. We understand you were under pressure, and you've done really well. And thanks to Chris for his support. Cool. All right, well, if there's no questions, we've taken these as read. Everyone's spent a long time reading through these wonderful set of papers. We've got the recommendation up on screen there. So we're saying that we're recommending, I can't see it, that the general purpose financial statements for FY25 present fairly the state of affairs of council, and that they be presented to council for adoption at its meeting on the 25th of November. Certification of the general purpose financial statements be signed by the Chief Executive Officer and the Mayor. The certification of the audit independence be reviewed and signed by the Audit and Risk Committee presiding member and the Chief Executive Officer, and the management representation letter be received and noted. Do I have a mover? Christine's moving, seconder. Ben seconding, all in favour? Carried unanimously. All right, so you're welcome to stay, John, or if you want to head off, you can head off.
I'll take leave.
Thank you. Okay. Okay, we'll move into item 6.2, which is the first budget update for the FY26 financial year. So we've closed off FY25, we're now moving on to FY26 because Erin didn't have enough to do. So Erin, did you want to present this item?
Okay, so through the chair, we've conducted the first budget update, and as you would all be aware, we usually focus on capital in this review, so bringing forward any unfinished capital works, but also having a look at unfinished operating initiatives and bringing them forward as well. It also is a review that we take into account the results from 2024-25 as well, so into the balance sheet. The operating surplus is going to stay the same, so we've had some minor movements, but we've made sure that the operating result has not changed. It'll be the capital works program, which will increase by 1.683 million. And of that includes $745,000 worth of carry forward. So the detail of those projects is in attachment 2. So the operating surplus will stay, it will remain unchanged. The adjustments that we had to make to the operating result were pretty minor in the scheme of things when you look at it overall. The net financial liabilities ratio will reduce. That's mainly driven by the finalisation of the 24-25 financial year opening balances for the CAD position, which was a lot less than what we forecasted. So I think we finished at about 20 point something mil against 23 mil is what we forecasted, so that's fantastic. The asset sustainability ratio, so the 3-year rolling average will increase to 111 from 96, which is what we forecasted in the adopted budget. And this is still aligned to Council's strategy to prioritise renewal of existing assets. So we're still on that path. So I'm happy to take any questions.
We've got any questions? No questions? Any questions? Yep.
Just for those listening in, and admittedly me, can you just break it down a little bit further when we talk about the additional in the capex, the 1.68? I understand. Yeah, if we can just give a little bit more weight behind it, just so when we're talking about it in the chamber, we can be a little bit more confident.
So the 745, so the carry forwards are simply just projects that were unfinished at 30 June that we're carrying forward. The other adjustments, without knowing the projects too well, there were some... I might need to take that one on notice and probably get Ashley from engineering just to break that down a little bit more for you. We'll make sure that that's included with the before council meeting.
Yep.
Yeah, that'd be great. Just I guess what I'm trying to get to is just carry forward. You know, I think we can sort of explain through that. The other projects that we might have had some overruns, which happens, you know, it is what it is. But if we can just identify what we've had to use over our contingency amounts and identify those projects and just give a little bit more of a substance of reasoning behind it, I think that'll help with the communication piece. Also, great work on the operating surplus, staying to the dollar. I mean, obviously, the skeptic in me goes, that's too perfect, but we're on our first quarter and, you know, there's always going to be those over and unders, which I think it is a credit to what we're trying to achieve and the overall management that you guys are doing. That oversight is providing a lot of comfort, especially for me personally. And as we run through, I think we've talked about it before, but these are those sorts of reports that we can hand on heart say, hey, these are the milestones that we're meeting, these are the ones that we might not be getting, but realistically next quarter we're going to correct it because we identified it early. So that's where I'm hoping we can get to, and I'm pretty confident we will.
Christine?
I was just going to say there's a breakdown in Table 5, but I'm not sure whether you were asking for more information than what's in Table 5 of that CAPEX program.
Are there any other questions? So I think at a high level, I mean, it's good, as you noted, that the operating surplus hasn't changed, so our operating expenditure is tracking, because the challenge is, and jump in, Erin, if I'm saying the wrong thing, but the budget's done almost a year ago in preparation, you know, for this, for FY26, and then you have the year end and the audit truing up all the numbers. So then you know where and a lot can happen in a year, so then you can see where the budget is right and where it needs to be adjusted. So, as Erin said, it's the capital works expenditure budget that's changed, and that is just because at 30 June 2025, there was a whole lot of projects that they weren't finished. You know, they ran behind schedule as projects do, and that amount of money gets put into FY26. And then the Q1 budget process is very intensive, because then, as you can see with the attachments, that every project's been analysed to work out whether is it on track, is it not on track, as far as the dollars go, and whether additional budget is required, because you talk to the project managers and you work out where the projects are forecasted to end up. And that's when you allocate extra funding if the forecast is going to differ from what was originally budgeted. And that's how you get to your 19.7 million of the capital works budget. And it's just making sure that you can finish off everything that was carried over from the prior year. You can finish that off in the current year, as well as completing your capital expenditure as planned. So yeah, that's sort of in a high-level summary. But I did like that. I went through all the tables, and it was a good analysis. So well done. I think we captured everything that had needed to move, and I'm very comfortable that the adjustments are in place to show how we're going to track for FY26. So well done on the end of the financial year. Ben?
Can I ask just a clarifying question? So on page 104 of our pack has a table which is the financial indicators, and the bottom ratio there is the asset sustainability ratio over a rolling 3-year period, and that has moved from like 96 to 111. So when you say over a rolling 3-year period, is that saying that the movement in this quarter has shifted it from the 3-year figure of 96% to being the 3-year figure of now 110, 111%?
Yeah, correct. So once you bring forward, once you carry forward all of those projects, there'll be some renewal ones in there as well. That's just moved the figure over 3 years to 111 instead of 96. In placement of 96, sorry. And
just to harp on this a little bit, so that is one quarter's change has shifted the 3-year figure from 96 to 111. So that feels like a really large shift from the way I'm interpreting this.
It's not the quarter as such, it'll be for the full financial year.
Oh, I see. So it's an update
Yes.
of... Yes, okay.
Yeah, so we're
Yep.
forecasting what will be at 30 June.
Yep.
Yeah, 2026. Yeah.
And then we've got the target being 90 to 100 and this being 111 with and a tick next to it, say it's within policy target. Has the policy shifted or?
No, we did have some discussion about this towards the end. So we're actually over policy. So it's a good thing that we're renewing our assets. So we've decided to have it as a tick because it's not a negative thing that we're replacing our assets in line with what we're trying to say. So we're trying to renew our assets at a faster rate.
Okay, yep. And sorry, one more. So you've identified a long-term financial plan. I believe there's a 4-letter acronym for it. Is it LFTP? Yeah. And you are, I'm not sure where I saw it, but there's a ratio of capital spend, and you're sitting at more than that figure. That I think you're at 110, 120% of the planned capital expenditure in the year. Is that driving this change? And the figure that has been presented here, does that reflect this increase, or is that again an increase on that even further?
I probably need to take that on notice. It wouldn't be exact. The long-term financial plan is probably a very high-level calculation of what replacement of assets that we were going to do. This is probably more of an exact figure because this is the projects that we've actually got in the budget. So I'll take that on notice and we'll get back to you with that one.
Thank you.
Because what happens, Ben, is they've got the asset management plans, which a lot of them were finalised last year and updated, and a lot of work was put into the asset management plans, and they flow through to the long-term financial plan. So that's when and there's been a big focus on capital and renewal expenditure, so that's why there's a big uplift in that figure. Also, as I said, correct me if I'm wrong, Erin, but this is the forecast for the year. So you've got your carryover from prior year plus your expected capital spend for the current year. It's a forecast, and you almost want to be over-committed because things happen and, projects fall behind schedule. And then you'll have, at the end of this financial year, you'll have your carry forward for the next financial year. And you want to make sure that you're not just kicking things down the road, but it's always good to be a bit over-committed than under-committed. If we were sitting, anything below 90% right now in the first quarter, then you'd be worried because it means that the project managers haven't scheduled their projects in to make sure that they're going to reach targets by the end of the year. And you do find you'll, not sure whether my prediction's right, but it will drop each quarter. It'll slowly drop down, and we're hoping that by the end of the year we'll be in that 90 to 100% ratio.
Yep.
Is that kind of right? Yeah.
And I did find the figure. So on page 6 of our pack, it has the 24-25 asset sustainability ratio is 138%. So that's almost 1.4 times higher than what the LT. And then in our first quarter, we recorded a further acceleration of capital spend. And I hear what you're saying, right? That from our constituents' perspective, this is a positive thing. That the outcome we're achieving is that we're getting better assets. I guess I'm just hoping to clarify that from a financial perspective and from a planning perspective, we've had this real acceleration, and that we're thinking ahead to say, we're able to stay on top of it.
Yes, correct. I would probably need to take this on notice and get the engineering department, so Ashley, to probably give you a better update on this, but it's definitely something that is in the forefront of our minds, so that when we're not doing a project and maybe replacing it with another one, that we are doing it as a renewal replacement type project as opposed to a new upgraded. So it's definitely something that we're focusing on. Yeah.
Okay, appreciate that. Thank you.
Mayor Shanks.
Thank you. Also, just picking up on the 500 and something thousand additional grant, am I right in saying that that's around the Tennis Association additional money? Yeah. So that's also going to distort our revenue in quite substantially, and it's going to be a value add on a capital project that we actually didn't forecast we were going to do. So that also is going to distort short term, but the value add of what that does for that particular delivery allows that club to finalise one of their stage 1 goals and even get into their stage 2 years in advance of what they wanted to. But taking your point is, what does that materially look like as a depreciation long term, because this is an asset that is going to be worth more, therefore we need to allow the depreciation, and then all that kicks off sooner than potentially we had in our long-term financial plan. But yeah, points to make for sure.
All right, are there any other questions? No? We're all good. So we've got the officer's recommendation that council notes the FY26 first budget update report, which is forecasting an operating surplus of $246,000, which is no change to the adopted budget. Capital Works expenditure budget of $19.7 million, which is an increase of $1.7 million, and a capital income budget of $5.1 million, which is an increase of $582,000. And so then, pursuant to Regulations 9, subject to Section 1 and 2 of the Local Government Regulations, we adopt the budgeted uniform presentation of finances as contained within Attachment 1. Do I have a mover? Christine, seconder. Deputy Mayor White, thank you. All in favour? Carry unanimously, thank you. Okay. All right, moving on to 6.3, which is the Treasury Management Performance Review for FY25. Erin?
Thank you. So through the chair, so this is an annual report that we do every year, which is just basically giving you an overview of how our treasury management function performed during the year. I will take this report as read. However, I do just want to note that the final borrowings you'll see were 20.907 compared to our budget, which is not in this report. We were forecasting 23.426. So, so this will have a flow-on effect as we go through the reports as well.
Yep. Cool. Are there any questions? No? Any Shanks?
Yeah, just quickly. I mean, obviously, our CAD is a facility that we need to use to operate, just keep our cash flow alive. Are you seeing any alarm bells at all where we might be dipping in short term that we weren't planned to? Nah, so that's all flowing well, because obviously if we've got our projects and capital works elevating, we might be turning around and going, oh, we need to dip into that a little bit more, but everything's all balancing and we're happy with it. I know it's somewhat in the report, but I get lost in the numbers a little bit.
From my perspective, so I thought we might be dipping into that new CAD that we got quite a bit this financial year, but surprisingly we haven't really had to. So we've been tracking along pretty well. So it's actually I guess the peaks and troughs of that we forecasted haven't really realised, and it's sort of been static all year. So that's been really good.
Yep.
And we're not worried about a catch-up to the forecast, like a heightened correction, or we're just happy with it all? It's more stable than we forecast, which is always great, but the cash flow is still hitting the targets that we want. It's just not as extreme, is what we're
Correct.
saying. Yep.
In fact, it's probably a little bit better at the moment. So.
Perfect.
Yep. And the exciting thing for people that have been following along for a while is on page 132 is that fixed interest loan that's been going since February 2011. That's paid off in February next year. So close. Because I remember, during COVID when interest rates were close to zero and we were paying 6.85% on a fixed interest loan. So that's caused a bit of pain over the years. So we would like to wish that well, and we'll say goodbye to it. That's right. Okay, thank you. Oh, sorry, Ben, you got a question?
I see on page 133, we've flagged the NFL ratio, right? The net financial liabilities, as being less than 50% by 2027. And just scrolling through this, I sort of saw that and I was like, there's no way that's going to happen. But it actually looks like we are on track. And it did shock me a little bit. Can you talk a little bit about the drivers or what's enabling that within the organisation?
So those targets, the aspirational targets, were actually set by the Audit Committee quite some time ago. So we agree with you, like we thought they were quite aspirational, but we seem to be on track to achieve them. So I think if we can get down to 50%, we can start looking at larger capital works projects, so like new initiatives. So, and that's our aim, is to get that target down. So, yeah.
And I mean, not really a question, but just a statement, right? But you've got, you're now in an operating surplus. Mm-hmm. You've got, as we discussed earlier, a heightened capital works program, and you're significantly reducing the debt. Like it all seems pretty amazing, and I'm just impressed.
I know, it's been really hard work by everyone. So council-wide, so all staff have really chipped in. So it's been great to see. Yeah, definitely.
And that was the budget repair initiative that was started a couple of years ago by Sharon, who, and it was very ambitious. So we had meetings with council, we had to convince council that it was possible. And it was, it had to almost sort of get worse before it got better. And now we're going, we're down the hill. So, you know, well done to everyone, to management. It's the result of a lot of hard work. Councillor Shanks.
And I guess the point there is why you'll sort of notice this, harp on about how we get our messaging out there as well, is because the ability to bring our ratepayers along for the ride only make the reasoning behind why we rate the way we rate easier to communicate in the long run. Don't get me wrong, we've got elected members in our current chamber that rightfully are sceptical because this is a new age, a new way of doing things. To be honest, our executive manager of finance, Sharon, was quite sceptical of us achieving some of the things that we're forecasting we're going to achieve. But albeit the hard work that's happened organisation-wide and props as well, now it's about the consistency and making sure that we don't get complacent and making sure that some of those things embed now. Because once we get to the half-yearly review, we want the same great news and then some, and then the three-quarterly review, and then all of a sudden we've got the first financial year full of these great initiatives actually paying off, and that's when I think we can turn around and, yeah, so you're on the right track, and I'm really humbled to have these conversations with staff because, you know, I've been an elected member since 2018 and it's taken a bit to get to this.
It's been a journey.
Yeah, absolutely.
And I think that's the message back to council as well is we had some pretty robust discussions after COVID and rates weren't increased, and then I remember the Audit and Risk Committee recommended a certain increase in rates, which was not accepted by council, and we had to go back and rework the budget. And the result of that year was that we weren't hitting our target surplus. So we were corrected it the following year. Once again, a lot of difficult conversations, but I think we've got the right balance now. So council has to remember that you know, you have to have a balanced budget, and you know, rates is the biggest source of revenue, and so that has to be taken into account as the overall picture for the financial performance for the year. Okay, any more questions? Oh, good. Okay, so we've got the opposite recommendation that we recommend to council that they endorse the FY25 Treasury Management Performance Review Report. I've got a mover. Ben, seconded. Christine, all in favour? Carried. Carried unanimously. Sorry, I'm choking. All right, we'll move on to 6.4 now, which is the unsolicited proposals policy. Have I got someone to present on that? Renee?
So, through the Chair, the unsolicited proposals policy provides a framework for Council to consider unique or innovative proposals submitted to Council that fall outside the standard procurement, land management or statutory processes. I'm happy to take the report as read, and if you've got any questions, hit me with them.
Are there any questions, Christine?
Just one. How often do you receive unsolicited proposals?
Through the Chair, I might take that one. We've had 2 in the last 6 months, so it's timely that we correct this and actually have a policy position, because we've been operating without a policy or direction. So it's been recent and influx, and we have had some, they're not formalised unsolicitors, but we've had some interest more recently around our community land management plan and future uses of a couple of facilities, which could turn into unsolicited proposals as well.
Any other questions? Yep, go.
Thank you, Chair. More of a statement, but thank Renee and your team. And to sort of echo the words of David, this is extremely relevant for Council in the last 12 months in particular. And I think it's quite exciting that we've got some principles that can help guide Council, which again, hopefully should actually encourage some more members of the community or people with interest to submit unsolicited proposals now that they've got those guidelines. So thank you for the work, and it does come at a very relevant time, I think, for Council.
Yep. Any other comments?
Yeah, just to echo the Deputy Mayor, but also just add in, because I read these policies and go, oh, they sound fantastic, but and I'm sure you'd agree, it always comes down to when they're tested. And I think it's great to actually get a policy position, and I could see straight through the pro-action why we were doing it. So thank you for that. And again, it'd be great to see what they actually lead into in the future too. And each unsolicited bid is going to help this policy evolve in its own unique way, because the unsolicited bids that you're going to get potentially are just going to be all over the place. So it is good to see the foundation. I'm looking forward to seeing it roll out, because I think we're going to have some real opportunities and some test cases in the not too distant future.
Yeah. Ben?
Thank you. This looks like a very sensible policy, and again, good to see that this guidance is in place. My initial thoughts when I read this was that you guys would be, this applies to the sort of proposals that you receive that I'm sure stream through the door. Lots of different proposals. And I see in the scope at 3.3, it talks about where a proposal is already governed by another policy that applies. So, and I'm just, I guess my question is, are you confident that you've captured every other type of, this sounds like it's only applying to very large scale things. You've got the CEO's direct attention. And so all the smaller items, are you confident that all of those are going to be covered off by other policies, and that you're not going to have suddenly, an unintended consequences of interactions with the council that are suddenly requiring the CEO's attention and, following this process?
Oops, sorry, I've just press it again. That's me.
Sorry. So through the chair, I did intentionally leave out any thresholds for the application of this policy, and I've done a lot of research in drafting this policy, and the approaches from councils vary very widely. I think what I did with this is actually, in terms of the attention of the CEO, he can delegate that to executive managers, and the point of that is that so it can be assessed, and they can and that person can determine whether this policy does apply, and if it doesn't go any further. Yeah.
Thank you. Any more questions? No. And I think it's good to be able to, you've got a policy to follow. If, someone from, the council or the area has got a really innovative idea that, is sort of taking it outside the box and considering something that hasn't been considered before, and to actually have a policy to follow, that you can consider that, and putting it out there and saying, look, the council's open to ideas, and, see what we can do. Because, we've only got limited funds, so let's use them wisely. All right, well, there's no more questions or comments. We've got a recommendation that for council to adopt the unsolicited proposals policy is presented in attachment 1, and that the CEO be authorised to make minor or technical amendments to the policy as required, providing they don't materially impact the intent of the policy. Have I got a mover? Ben, seconder. Christine, all in favour? Carried unanimously. All right, item 6.5 is the policy review of the corporate purchase cards. Does someone want to talk to that one, Renee?
Through the chair, this policy clarifies the responsibilities, strengthens controls, and updates processes for card application, use and reconciliation. I'm happy to take this report as read and welcome any questions.
Got any questions, Christine?
I didn't write down the page number or section, sorry, but I read in there somewhere that the credit card should only be used in the absence of an existing supplier agreement or supplier account. How does an employee know that there's no existing supplier arrangement?
We have contract registers and vendor registers. Also, the corporate credit cards, there's very limited, they're just basically sitting with the executive managers. So there's very high level that they sit at. So they are aware through communication and the platforms that we have of whether there's an arrangement or not.
Okay. I've got other questions. Okay, next one. The credit cards have monthly limits. I have observed in some other organisations that to get around that limit, the credit cards are replenished with cash during the month. So say the limit's $5,000, they're effectively spending $10,000 a month, say, because they fill it up with cash again and then they spend another $5,000. I didn't see anything in here to say don't do that. So I'm just wondering what the practice is. Do you just pay them off once a month or do you replenish them?
So, sorry, through the chair, yes, Christine, we have been known to have to replenish a credit card. So usually it's a special circumstances, like when we're paying for the vehicle registrations, which can only be done through credit cards. There have been instances as well where somebody has required to purchase something by credit card because they don't allow us to pay via bank details or EFT or whatever the reason might be, and we have had to do it. It's not on a regular basis, but we have been known. So I don't think it would be a great idea to put that in the policy because that would restrict us in those circumstances.
Which just leads me to my next question. Are the limits high enough if people are having to do that?
So through the chair, in general, the limit is perfectly okay. We do have those anomalies, and the biggest one is registrations of vehicles. It's an annual thing that we have to do, and unfortunately, services, they don't allow us to do it any other way than pay on credit card. So we know it's coming, and we actually time that in that month to preload the card, and then off we go. So in general, no problems at all. It's very limited circumstances where we need to go over that. So I wouldn't be advocating for an increase on our limits.
Okay.
Can I just to clarify with that, because it's not, it's a common problem across organisations. I've seen it in a couple of other organisations too. But when you're saying that, you're loading the credit cards, you're just getting the expenses reimbursed, aren't you, for so it's not like you're just whacking a whole lot of cash on it. It's like you're getting up to date with all the expense remittances to lower the available credit. So, it's not, just wiping it without any authorisation, because I'm assuming that process has to be approved as the expenses are remitted. Yep, cool.
Are any of the credit cards linked to frequent flyer points?
No.
And do we need to put that in the policy that they won't be?
I don't think so.
Because you don't usually link them?
No, we don't. No, the type of credit cards that we get through our bank. No.
I don't even think it allows us to do it through the type of credit cards that we have.
That's good.
Yeah, but we can check that for you.
Okay.
I think it might be something just to take offline and consider. It's a minor amendment, so we're happy for you to incorporate it into the policy if you want. I know that the ones that I've seen they have a line saying that there's no rewards programs permitted to be signed up as part of the credit cards, because you can, you'll review your policy, but you can change providers and that. And different providers have different perks. Mayor Shanks?
I'm obviously right in saying that we're on the 3 year, so we're up for review anyway, so it was a good time to have a look. I did notice that we've changed from 3 year to 4 year, and there is a lot of red in the change. So just around the controls, obviously I'm not worried about anyone doing the wrong thing, but just around any, our changes are actually for the better, our measures, etc., that we won't actually be up for a formal review for 4 years now, which, to be honest, sort of aligns with a lot of our other policies anyway, which is probably why you did it. So can sort of see through that, but I guess, the control side and the monitoring and, quality improvement generally.
Yeah, absolutely. So the 4-year review cycle is to align with all of our other policies. And the reason you see a lot of red in them is that it's really intentional to streamline these policies and make them policies and not procedures. And behind the majority of policies you see there will be administrative procedures on how we monitor all the controls in there. Yeah.
I'd just like to say I review a lot of policies and you've done an amazing job on streamlining it. Well done, because it's not easy to get it more succinct and still make sense. So it looked really good, so well done. Ben?
Just on that, I see as part of the review and the reconciliation, there are executive managers must approve all reconciliations. And I'm not super familiar with the structure of the organisation, but I mean, roughly how many cards are there and how many exec managers have you got? And what's the sort of rough time commitment to?
So through the chair, I think we have about 9 cards.
Okay, yeah.
Maybe, no, because we've got some more. So we have exec managers and then we have a couple of other positions which hold cards as well. So I think it's about 9 in total. We have 5 exec managers, 4 exec managers and the CEO, sorry. So we've got plenty of people to sign off.
Great. Sorry, one more. Does this specify that you can't approve your own reconciliation?
So it's got the approval pathway. So what happens is anyone who is a manager gets theirs approved by an executive, and anyone who's an executive gets theirs approved by the CEO. CEO doesn't actually have a credit card.
Yes, he does.
No, he doesn't anymore.
He did.
He does not anymore. And only 2 of our executive managers have credit cards. So it's actually quite limited. I think there's less than 9 now. Yeah. We've cut them. They're actually cut right back, and always when the questions come, it's how we want to pay through our AP system. We don't want to pay through any other way. So credit cards are the last resort. Yeah.
Yep. That's a good thing. Sorry, go.
And so I see the approval path for new cards, and I'm wondering whether there's something should be in the procedure or the policy, but it's almost, I just don't see anything here that says that a person can't reconcile their own.
So what happens is we've got a program called ProSpend, and they have to upload all of their receipts, and then the program sends, once they submit them, then the program sends it up the chain to the next person. So the cardholder puts all their receipts in and submits it, and then their executive manager will approve it, or if it's the executive managers, it goes to the CEO for approval. The program won't let us process anything unless it's gone through those approvals. So that's the benefit of having systems with workflows that are set in place. Yeah.
Okay, thank you, I appreciate that.
So you're saying it's an IT controls in place to prevent people from approving their own things? Yep, go.
Probably in a similar vein. So in the policy, what about duration of the reconciliation? Because if someone lags behind that, it can trip up your financials, especially if it's timing prohibitive with your quarters.
So that's really a procedural thing, and we give people, I think we've just updated the procedure as well, 10 business days to do that, and lots of reminders to get it done, because it does absolutely cause a lot of problems for us, so we want it done.
Cool. Are there any other questions? No, we're all good. Okay, so we've got the officer's recommendation that the Audit and Risk Committee recommend to Council that it adopts the revised corporate purchase card policy. It's presented in attachment 1, and once again the CEO can be authorised to make minor or technical amendments as long as they don't materially impact the intent of the policy. Have I got a mover? Christine, seconder. Ben, all in favour? Carry unanimously. Okay, moving on to the information reports. So 7.1 is the financial performance summary for FY25, which accompanied the financial statements. Did you have anything further to say, Erin, or just happy to take questions?
I'm happy to take questions. There is just one thing we will have to tweak something because there is an error in the report. So just to be consistent with the financials, the underlying deficit, which is on the first page of the report, is 2374. I just need to update that to 2357. And we have so it is it's unfavourable by $663,000 compared to the adopted budget. I guess the big ticket items throughout the report, so if you just wanted just a summary of them, we've got the Gawler and District Netball Courts, which was reallocated from operating to capital, so you'll see two big chunks there, which is about 2.3 in operating expenses and then in income. It just does touch on the LRCIP funding, which was reclassified from capital to operating, so that's in there as well. We have the advance payment of the FA grant, so of 1.564 million. The impact of the Norma subsidiary result, which was $520,000 higher than we originally forecasted, so that's in further report as well. And we also experienced a $775,000 increase in our depreciation, which was driven by our condition data and revised unit rates during the year. So this is something that we went through at audit time as well, so we will be reviewing that during the year just to make sure that they're appropriate, and also what the impact will be for the 25-26 budget.
Yep.
I'm happy to take any questions.
Thanks. Any questions? Any questions? Kelly? One question, and probably relates, I'll bring it forward rather than back, is with Norma. What was do you understand what happened at Norma?
Kind of. So from my understanding, because they've closed the Ullaberry site, so there was a hit to their operating surplus of $7 million, so of depreciation, so they had to revalue their assets.
Oh, okay.
And I think John was going to probably explain it a little bit more if they had any questions, but also they had to amend their provisions for the remediation of the site as well.
Okay.
So
yeah.
they're both two big non-cash impacts that they've had to their financials.
Yeah. So I'm assuming because they're audited financial statements, but it was a lot of, as you said, it's an accounting judgment for the closure of a site and remediation, and that's why it probably doesn't make sense. So we'll just assume the number's correct, and then we take a portion of that. So. Yeah, cool. Ben?
And is this in relation to the waste management site?
This is, Norma.
Yeah,
Norma's,
yeah.
both
And I know we are going to cover off those financial statements a bit later.
Yeah.
And I'm just, if this is the appropriate time to talk about it, I guess I had a broader question to say: is this a one-off impact, or are there going to be impacts going forward? So, okay, yeah.
My understanding is it'll just be a one-off, but I can't be sure.
And I think I asked the question because usually with the, what are they called, subsidiary accounts, there's usually no impact of the equity accounting for it. And then this time we've like, oh wow, there's a bump. So yeah, it's unusual for them. Patience.
There's probably some scope in the future to potentially do a bit of an information briefing with the audit and risk, with Norma accounting as well in the room. There has been a bit going on with Norma, so and especially if we're going to start seeing some of these things affect our bottom line. There's some exciting projects Norma are undertaking, but there's also some other things going on that it would be great just to, I guess, bring the audit and risk up to speed with, just so that when we are seeing some of these figures,
Yeah.
and I'd love to hear some of your experience as well with subsidiaries as well. I didn't say that word right, but you get the gist. And then at least, you know, we are probably doing our due diligence in using our audit and risk to talk about risks that may be on the horizon.
One of the other audit and risk committees I'm on also has an investment in a waste management authority, and so once a year a representative from that waste management authority comes and presents to the audit and risk committee, so that we've got a good idea of what they're doing and what risks might be coming up and can ask questions. So maybe because these numbers are starting to get a bit big, it would be interesting and useful for someone to come at some time and tell us what's going on.
Yeah, maybe one of the meetings when we've got a lighter agenda, because what normally happens is we get through all the financial statements and then there's the subsidiary financial statements, and we've just got complete burnout by the time we get there. So it might be good to do it sort of other times of the year to get an understanding. All right, sorry, now I'm jumping all over the place. I'm not following protocol. So 7.1, we've got the recommendation that we receive and note the FY25 financial performance summary report. So have I got a mover for that? Christine, seconder. Ben, all in favour? Carried unanimously. And then we jumped ahead to 7.2, which is the regional subsidiaries general purpose financial statements for FY25. Do we have any other questions on those? Yep, Christine.
Do we have any idea how long it's going to take to remediate the Ulibri landfill site?
Through the chair, no, I don't. My understanding from John is that the provision was for the entire project of remediating the site though, so hopefully my understanding is we won't be incurring any more, well, they won't be incurring any more costs, which won't affect our equity share going forward. So, but we'll take that on notice, and if something comes up, we'll let you know.
That's all. No more questions? So we've got the recommendation. So I'm going to cough again. Hold on. Apologies. Recommendation 7.2 up there. Do I have a mover? Christine, seconder. Ben, all in favour? Carried unanimously. It's doing so well. Cool. Okay, 7.3 is the insurance renewal for FY26. Renee.
This is just provides a overview of our insurance coverage for this financial year, so I'll take it as read and welcome any questions.
Just wondering how these premiums compared to the prior year. Did they go up or down?
I'll have to take that on notice. my understanding that they went up, but the percentage was minimal. We thought they would go up a lot more, but I'm pretty sure it was very minimal, like, yeah.
We're lucky that because we're all councils, we all use the same scheme for our insurances, so they actually went out to market a lot more and got a very competitive rate by pulling together. So while some areas did go up, they actually got better deals on other areas. So overall, it was only a minor increase. The exact figure I can't say, but I remember they were quite impressed with what they were able to come back with for councils.
Christine? Yep.
Just the reason I ask is some of the other organisations I'm involved with have actually had decreases of up to 20%, because there's been a big softening in the insurance market. So I was hoping that maybe this council might have experienced those savings as well.
Nathan?
This year we did quite a comprehensive review of our assets to make sure that our actual assets insurance was at a effective level, that if something did happen we were covered. So yeah, that's, yeah.
So the rate in the dollar may have gone down a decent amount, but the assets you were covering might have gone up.
I think as the councils, the value of assets keeps increasing, so therefore your insurance premiums keep increasing. But it's a good point that it's done through the LGA, so you have got a competitive rate. Plus, my understanding is you've done everything you need to get there's a rebate, isn't there, for the insurance? So if you prove that you're compliant, then you get that rebate back. So that I could see that Gawler's done that as well. So I think you've got it about as cheap as you can do. Mayor Shanks.
Yeah, I've noticed the same thing with the insurances as overheads and the policies that you need. Certainly we're seeing a little bit more stability. I saw these figures and I can't remember exactly what they were last year, but to me they felt less stable. And that was just a gut. But it does align with, the natural disasters, et cetera, that really inflated the industry out there. It is one of those ones that I'm always sort of a little bit, it's all good now, but then we do get those flood events and whatever else, and all of a sudden we're in that super heightened time again. And I always try to, and I don't know the answer for this, but I'm always like, what do we do now when it's stable? How do we prepare for when it's not? But I don't know how to answer that because the insurance companies are just all over the shop. But you're probably seeing more offering and more confidence for other providers actually coming into the market again, whereas some of the big ones had it absolutely choked and other ones weren't offering the policies. So it is good to see it stabilise. I just don't see it stabilising forever.
So through the chair, while you've been chatting, I looked up last year's report, and last year's report total was 1.322 million, or 1.333, so $1,322,940. So we've had a minor change to $1,331,000. So roughly $90,000 in that. Yep.
Yep. Cool. Thank you for that. All right. There's no other questions or comments. Do I have a mover that we note the insurance renewal FY26 report? Ben, seconder? Mayor Shanks, all in favour? Carry unanimously. Okay, 7.4 is the internal audit update report. Nathan, did you want to talk to this?
Through the chair, thank you. So as discussed in this report, Bentley's continued to deliver their 3-year audit plan, undertook an audit on contract management review, basically to review and strengthen our contract management framework. Yeah, it was a good report, 3 findings that were medium. Renee and her team have done a fantastic job to create an action plan that will be working over the next 12 months to strengthen this framework. Happy to take any questions.
Thanks. Any questions? No. question I had, sort of just in layman's terms, because I was getting a bit of reader's fatigue at this point in the papers. So there's a contract management module that needs to be implemented. Did I read that right? So,
Yes, that's correct.
so, and are you able to implement that? Is that like a big ask, or is that actually feasible, or is it going to take sort of time and money to do, or?
It's feasible. It won't take time. It won't take money, but it will take time.
Yeah.
So at the moment we're using the module, but basically just as a contract register, we haven't gone into the more stuff you can use with it to actually actively manage a contract. And a lot of it will just be around configuring workflows and then delivering training and education to staff, and that change management that goes with it, from moving to managing contracts through a spreadsheet to managing it in system.
Yeah.
Yeah.
Okay. Because I think what you want to be mindful of is that these are all, valid points in the contract management process, but you don't want people distracted from what they need to do. So if, they're spending extra time, even though we love risk, even if they're spending, extra time on a risk matrix or that compliance thing, I mean, they're nice to have, but, at the end of the day, you want to deliver a contract within budget and achieve the outcomes that you needed to achieve. So I think keep that in the back of your mind as well. And I think also from a contract management perspective is the lessons learned at the end of the contract. I find a lot of organisations don't do that very well. They sort of finish and move on to the next thing. And it's really important just to pause and work out what went well, what didn't go well, and also to assess, the contract provider, because then if they're not up to standard and then they're re-engaged for another project, that can cause all kinds of problems. So I think that's probably the most important point, but I think just make sure that you've got a balanced approach that's not, getting too cumbersome and, distracting from the actual delivery of the project.
Yeah, I absolutely agree. And isn't too complex, otherwise you just disengage. Your employees disengage and they don't do it.
Yeah. So make sure you get that balance. Are there any other questions, Ms. Shanks?
The conversation only made this click now. So when we talk about the contract management, are we talking software? So we're talking, okay, cool, no worries. Out of interest, what are the software that you guys use in local government for contract management? Is it the same as what we use in construction? No? Okay.
No. We use Vendor Panel, and we are probably one of the early adopters for using software-based contract management platforms. I think you'll find that contract management is often where councils fall over. They put all their effort into procurement and just let the contracts set and forget, which is where we're really trying to move past that.
So Vendor Panel, the module that we're talking about, so does that have the capability to request your contractor to upload things like variation requests, programs, EOTs, et cetera? Is that what it allows you to do? Because you touched on you use spreadsheets at the moment, but obviously that might come into data manual entry, so that if your project manager enters wrong or is a little bit behind in the month, you can lose track of that. Am I saying that?
It will track variations, and it will you put your information in there, and it will spit it out in a template, and then you send it off to the contractor to get signed off. It's not a project management. I guess that's the hard thing, is in trying to balance the need to manage a project and manage the contract. And so that's the difficulty. Yeah, cool. I'm trying to turn my construction brain off a bit, because I guess those key fundamentals, if they are managed, then the contract management side just happens almost organically, because the contract management will start flagging when you're getting close to breaching or things that you need to be making sure you're crossing the T's and dotting the I's. On that project management level, contract administrator level, that overlap sends up those early warning signs, I guess, sooner rather than later, and they get in front of
a contract breach once it's been breached and we're, 6 weeks past the process. So the notifications, early notifications, etc. But yeah, no, sorry, I was interested.
Yeah. The independent has, like the contracts module has a portal that you can enable for the contractors to go into and upload like updated insurances and all that type of stuff. And I guess one of the benefits when you are an early adopter is you can provide a lot of feedback, and they do actually take that on board because they want to improve the systems that they have so that more people use them. So yeah.
Ben?
Can I talk about the first observation? It describes a contractor being engaged without a formal contract. And so I've had a look. It's the that specific sample, I think, is between 50 and 200 grand in the that category. And I see this has just been rated a medium issue. Are we able to talk through some of the mitigating factors, I guess, that influence this, given that, in this case we've got work being done without a contract in place?
I think the reason that it came out being a medium issue is that it was one contract out of the 200 plus that were in the register. So like when you look at one contract that they found out of their sample, the risk associated is relatively low because all the other ones were compliant. Yeah.
So 1 of 20.
1 of 20.
Okay. And I notice also in that same observation it talks about a contract variation that doesn't have an agreement. So if we look at that as being the underlying issue there being documentation of being engaged, that's now then 2 of 20. And I guess I understand your point that it's only a small number in the sample, but could you talk through some of the other elements that are, within this area that might help alleviate that risk or alleviate concerns about not having a contract in place if you're engaging?
Yeah, so we absolutely recognise that this was a compliance issue with that contract not being executed. So we've recognised that, and that's why we're going to address it through the action plan, which is basically around education and training to staff and having those checkpoints in place. When you talk about the variations, that was one variation out of more than 20 variations. Like some of our construction contracts have, and pages and pages of variations that they agree to. So it was one variation. That was agreed to in email correspondence, but wasn't formalised through an actual signing.
I think with the, I'm assuming with the procurement process, because you've got, there's a procurement plan, and then, you've got the evaluation criteria, and all these steps take place before a contract is actually executed. So it's not like they've just gone out, I'm assuming, gone out and done work without any kind of assessment. But once again, just a communication just to make sure that that contract's signed before any work's done from an insurance perspective and things like that. So, but yeah, I'm got faith that, it wasn't just no consideration whatsoever. It might have been they were confirmed via email, but then, someone was away. But we just want to make sure that, the contracts are signed.
Yeah, through the chair, that was a staffing resourcing thing where lots of changeover in the staffing in that department. It was a consultancy contract, so I guess the risk is lower. It wasn't a construction contract that they're out on site. It was consultancy. And yes, it did go through a full procurement process and sign off. It's just that the contract, despite going back multiple times, it got lost in translation through multiple staff and people thinking other people had organised for it to be signed off and all that type of thing. So it's unfortunate. But obviously one of the key things that were found, and that's being addressed by the action plan.
I appreciate appreciate that, thank you. And I guess that sort of background helps a lot, that there was an agreement in place that would be, you know, negotiated by both sides. It just hadn't actually been, yeah, okay. So I appreciate that, thank you.
Are there any other comments or questions? No, we're all good. Okay, so we've got the officer's recommendation that we note the internal audit update report. I've got a mover. Mayor Shanks, seconded. Christine, all in favour? Carried unanimously. Okay, so 7.5 is the risk management update. Nathan, did you want to talk to that?
Thank you, through the chair. So our risk management framework was adopted in 2023, so we're end of 25. So yeah, we're starting to review our risk management framework, making sure that the appetite is current, suitable for council as we are now. So we have been utilising Bentleys to assist in that. So basically the project that we're working on is over the next 2 months. Surveys went out to the elected members, Audit and Risk Committee, and also Exec. And those surveys were just as a starting point, so that when we do run workshops with everyone, we're not starting from scratch. We've got a bit of a guidance note of, are we happy with our risk categories? Do we need more? Do we need less? What do we think of our appetite statements? Are they current? Do they need to be adjusted a little bit because things have happened in the last 2 years? So that's sort of where we're working on. So that's what the survey was just as a starting point. So when we do our workshops, we're not starting fresh. We've actually got we can refine some of the workshop to streamline it. So look, all those surveys came back. We have had a workshop with Bentleys and also the exec management team to look at those survey results to see where there were key factors that were really where we should be focusing at. And then I believe on the 18th of this month, we've got a workshop with elected members and the Audit and Risk to start looking at the survey results and start polishing a little bit. And then I'm happy to take any questions.
Mayor Shanks.
I've just realised I haven't filled out mine yet. Is that now closed?
Yes.
It is, yeah.
That's right.
My apologies. I'm getting flooded with emails at the moment.
That's right.
As I'm sure you can appreciate. But yes, now that was on my to-do list. That is now on my not done list. Thank you.
Get a second bite of the cherry though at the workshop.
Yeah.
So we want full participation at the workshop. Deputy Mayor.
Thank you, Chair. Just a question, Nathan, to you. We've recently been looking at climate risk as a relatively sort of new risk that councils are now factoring in. Is this something that you're considering during this review?
Through the chair, so as we were looking at our risk appetite statements, there was a common theme that at the moment we've combined heritage, environmental risk in one category, and there was some feedback in the surveys that we should actually be pulling these apart because they're different risk appetite statements from the natural environment to the built environment and also heritage. So that was a discussion, but look, more of that will come into the workshop that's coming in 2 weeks. Yeah.
Are there any other questions or comments? Yep.
Yeah, probably very similar to what I've said before. You know, the conversations that I find that we have in local government is seeming that it's always very mixed because people's experience with risk or what they do on professional level and then what they do in their everyday life is completely different. You say to someone a few years ago, "Oh, what's your risk appetite?" And it was a buzz term, and now here we are with where we are now. Environmental risk appetite is certainly something that we're seeing in construction. It's flowing through. I'm not going to lie, it's getting met with a fair bit. But when you actually unpack the why, that's when you actually can harness the best conversations, because when you start looking at environmental risks, and just put aside any misconception you might have, but you actually start unpacking it with associating it to it can hurt your bottom line. And if you actually start thinking about it a bit, if you factor in these things and allow for these things or tweak these things, it could help your bottom line. And that actually brings a lot of people along for the ride, funnily enough, and that's where our risk climate conversation was talking to. We're not only talking about where our exposures are potentially from a legal standpoint on, hey, we didn't shade those playgrounds when we knew the sun was getting worse and now my son that's 25 years old has melanoma. You know, all those things that you have to talk about. But if you're talking about your stormwater management and you're looking through the climate risk lens, you can actually factor that into your upgrade works that ultimately could save you money later on, and even better again, could turn into water harvesting opportunities and the like, because you're looking at mitigating risk. But it actually aligns to how risk can turn into opportunities as well. So those are the conversations that I like having. My appetite for risk, when we have the conversation, I'm in high risk every day. So we actually don't have an option to avoid. We have to manage. And when people, like in other walks of life or whatever, when the option is to avoid, all good. But if that's your natural reaction, you actually then need to weigh up what the avoiding does and the domino effect of actually not doing something. And that's where I'm sort of noticing the conversation go, but that's an evolution that I've noticed over years, and it is an interesting conversation when I come from our industry into local government, and it's a different perspective that I actually am able to take back to construction as well. So now it's cross-educational, which is quite interesting. But anyway, sorry, that's just on a tangent there, but it's just an interesting space to talk to. And I'm looking forward to filling out my survey verbally on the 18th.
Thank you. Any other questions or comments? Dying. So mover that we note the risk management update report. Mover, Christine, seconder, Ben, all in favour? Carry unanimously. All right, item 7.6 is the Policy Governance Framework Implementation and Policy Review Update for Q1. Susie, are you?
Through the chair, I do have a bit of an update. I've done a fair bit of work since this report was written to redraft the couple of months that we sort of fallen a little bit behind with the schedule as it was initially presented. And so I've been drafting an email to Chris with all the work with different staff to say what potential policies could go to the November meeting. There's two that are currently awaiting review by governance, and then we'll go to the executive management team just to get that final sort of eye over that they're happy with it to go through. And I've got 5, I think, on the list of 4 policies, and 1 code being the abandoned shopping trolleys code that are in our current corporate suite of policies that can be revoked. So with reasoning to support that can proceed. So that will nearly, then once I rejig a couple of others in the schedule, bring us more up to speed of where I had envisaged that we would be. Yeah.
Cool, thank you.
I can also just quickly say that the resources have been loaded all up on a revised intranet page internally for staff and I've put a big note just saying that the revised schedule will be up there soon as I can lock it in. And once I've finished it, I'll send it off to our executive management team for their review. So they've got new templates. I've nearly finished a tips and sort of general conventions 1 page. I'm hoping it doesn't go over a page, just to get that consistency across our suite of documents. and hopefully the next update from there, we're sort of back up to exactly where I'd hoped to be after having that time, where we were a bit stretched for resources.
No, well done.
Yep.
Trying to keep it on track. Are there any questions or comments? No? Cool, thanks for the update. So we've got that we've recommended that we note the update on the progress of the policy governance framework implementation and policy reviews for Q1. Have I got a mover? Christine, seconder? Ben, all in favour? Carry unanimously. Okay, then item 7.7 is the governance compliance update for Q1. Back to you, Susan.
I'm happy to take any questions on the report. I guess just observing which sort of areas are now up to date. All the confidential orders register has been redone and is up to date. I have repulled the full delegations register for council. However, I'm aware that there's a couple of the position titles via the expenditure policy that need to be altered. So just to give you a bit of a indication, the full register of delegations under all the acts that council delegate to the CEO, who then sub-delegates onto staff to undertake their functions and duties, is 1,027 pages long. So I'm just cross-checking that there's nothing sort of historically that's not been removed, and yeah, we'll need to reflect the couple of title changes that we've had and update those in the system. That's just so I can put the full register onto the publish it to the website, and so that works ongoing. It is. I guess, somewhat challenging, not just for governance, but across the organisation when there are title changes, which are required if there's a position description change. No problem, but sometimes where we can't necessarily see the justification because the onflow of work with things like delegations, and I know HR and IT have different things. Yeah. So we did mention that at a leadership meeting, and I think that there's only been one or two that have come through, but yeah, I want to get that full register of sub-delegations and the delegations to Chris are included in that as up to date as possible at the time of publishing it up to the website. Yeah. Any questions on anything else? I think it's pretty comprehensive and pretty forthright update as to where we're at with different matters.
Yep. Any questions or comments? Mayor Shanks.
Just a quick comment, slightly off topic, but sort of on theme. We're coming to the end of our trial period as well in relation to where we got rid of our CCS and IES and substituted for information briefings. I think there was a little bit of a, not concern, I guess, thought that we might end up in more special council meetings and that actually might end up in more reports and more resources, et cetera, et cetera, et cetera. I think you can sort of see in our report there that hasn't actually been the case. I think we've been utilising those information briefings. Yep. Don't get me wrong, you know, there may be some area improvement from not only the presenter side, but also elected member attendance. Sometimes we can be a bit fickle, and you know, if we're holding information briefings, I think it's really on elected members to make sure that we're there. Sometimes you can't. Sometimes you're using the resource on YouTube later on. It's all good. But I'm really looking forward to the conversation that is to come, just to try to unpack what's working and what's not. I'm hoping that there's less report writing going on in the organisation, which is actually helping Susie to do a lot of policy review and get in front of all these other things as well. So yeah, stay tuned. I guess you'll probably hear some of that feedback flow through to the audit and risk on our operations in the chamber, from committee levels to the chamber.
Good to hear. Any other questions or comments? No, well done, Susie. It's
Thank
hard
you.
to keep going, you know, it's you're very good at, I get a comfort over the completeness of everything, so.
Oh, thank you.
Well done. It's not, as I said, it's not easy. Okay, so our recommendation is that we receive and note the governance compliance update for Q1. Do I have a mover? Ben, seconder. Deputy Mayor White, all in favour? Carry unanimously. Okay, so item 8 was items listed for discussion. There are none. 9 was questions without notice. There are none. 10 is motions without notice. There are none. Just like to thank everyone for putting up my raspy voice and my cough. And so I'll close the meeting now at, what are we, 8:45 p.m. with our next meeting on the 3rd of February 2026. Thank you.
Okay, now this, we have to go in stream. In stream.